Good afternoon, everyone. This is Sandy Chaikin here for the third Inner Circle. Thank you for your patience in switching this from last Tuesday to this Tuesday due to the storm and some travel arrangements getting up to Boston that had to be rejiggered. So this one is about my 15-minute routine. How I manage my portfolio in 15 minutes a day. And I'm going to be full disclosure here in that I have not scrolled through my stocks or done my normal routine this morning because I wanted to do it for you as if I were doing it for the first time looking at the market. So this is going to be fresh to my eyes as well, other than looking at the index of stocks that you see here. So what I do every morning and every evening after the close is to scroll through the stocks in my stocks list. And then I also scroll through the stocks that are in a watch list. So when I opened up my platform, this is basically what I see. My stocks list are listed here. I typically own 10 to 12, 10 to 14 stocks at any given time. I've been selling some recently, just taking the profit and sitting on the sidelines till this volatility kind of calms down. And last week, as you know, was a really rough week. The S&P 500 was down 6% for the week, but the tech stocks, and I own a few tech stocks, were down 8%. So this is kind of a wild ride. Mark said in his Market Insights on Sunday, which you all get, and I hope you read, because they're incredibly valuable for setting up your expectation for this coming week. But he basically says expect it to be volatile and expect this W curve, which I'll show you on the SPY, is what he's talking about. So here's the beginning of the W back here in February 6th, I think it was, when the market dropped. They did that 10% correction. Comes back up again, back up, and here is the second part of that W. So if Mark is correct, this will be on the upside going forward if we don't get any of those great big down days, which so far we haven't gotten. Yesterday was up nicely, huge, and today is up so far as well. So that's just kind of a little backdrop here to what's going on in my head as I look at my stock portfolio. Okay, so let's pretend I just logged on. It's 9 o'clock in the morning. I'm looking at them before they open. The first thing that I do is to go up here to this little bell up in the far right corner where you see it says 4. I click on that because that gives me the alerts. These are kind of like an executive summary of my portfolio. Anything important that could affect the price of the stock. And as you can see under bullish, 2 of the stocks I own, the power gauge turned from neutral to bullish. That's good to know. And one of the stocks I own, an estimate revision came in and was revised lower. So these definitely could impact the price of the stock. So then I go back to my workspace and I click one by one. Now, because the market's opened, I'm going to drop down this 1 day screen here so I can see what the price is doing in real time. And this is really helpful if you're going to buy or sell a stock. You can gauge the trend very easily by looking at this and pretty much time your entry or exit. All right, so here's what I do. First stock in here is Technology AMAT. I've had this stock for quite a long time. You can see power gauge, as my alert told me, just went bullish. Relative strength is strong. A little bit of money coming out, but there's been a lot of money coming out recently with all this volatility. So this, to me, this is fine. You know, I'm just going to hold on this. This stock was up big yesterday. You can see it. A couple of days ago, Monday, it was down as low as 59. Yeah, 53. And yeah, 55. Sorry, down to 55. You know, it then went up 3 or 4% yesterday, and now it's pulling back just a little bit. So no problem. I'm just going to sit tight on that stock. Lam Research, same scenario. Power gauge just turned bullish. That's cool. Relative strength, as you can see down here, and money flow is still strong on this. So this is a great stock. I'm still in this with great confidence. ABBV. Now, there's a story to this. Not a good story. I bought this on a limit order back in February 6th, right here, when it pulled back all the way to 101, thinking this is great. This is one of the drug stocks that's positioned to do very well with the new tax laws. They're going to reap big benefits from that. And everything was going along nicely. Volatility with the market until I think it was Tuesday, or was it Tuesday that it dropped? Tuesday or Wednesday. It was up at like 113, and it dropped down like, here you go, 95. Ugh. Reason being, they pulled a test. They were testing one of their new drugs, and they announced disappointing phase 2 data. And with that, the stock literally dropped like 13% in a matter of like an hour. And that was this big drop back here. So the question is, now what do I do? Okay, I'm in this stock. I own it. Power gauge is neutral. You can see relative strength has just turned negative, and you can see money flow has turned negative as well for about a week. So with these drug stocks, they are highly volatile, and I know that going into them. And my outlook on these drug stocks is that they're really positioned. I'm positioned for the long term on this. This is not like a swing trade opportunity for me. This is something that I look at and would hold longer term, looking several years out, because of the cycle of getting these drugs approved and in and out of the market. So I could take that view here, or I could say, oh boy, this really doesn't look good. It's down again today. When the market's up, it was down yesterday when the market was up. No, it was up a little bit yesterday. So I might wait for this to get oversold. You can see down here, it's now at its lowest, which means the price is probably at the low end of the low. I think I will wait because it is oversold here. And when I sell, I like it to sell it when it's overbought, which is above this 70 line up here. It correlates to that zigzag pattern that is so clear on that Wyckoff chart that I show during my webinars. So even what I'm going to do is just sit on this for a couple more days, see what happens, see if it starts trending back up again, particularly to an overbought level. And I might sell it then, or I might say, well, gee, this is one of these drug stocks that I should just hold on to and close my eyes and wait, because it is going to be very volatile for a couple of years. So that's my thinking on a stock like ABBV. Moving on to Apollo. This stock is also a quandary for me. Again, you can see power gauge neutral, relative strength and money flow negative, which is pretty much my setup for a sell. What I would like to do with this stock, though, is wait for it to be overbought as well, for it to come up out of that, up to that 70 mark on the overbought oversold indicator, so that at least I get the benefit of a little bit higher price, and then I'll sell it and take a loss on it. But with all of this turning negative here, it's not pointing me in the right direction. The neutral plus rating, as you can see, most of my stocks have neutral plus ratings, power gauge rating, means that the underlying factors are bullish, which is good. The reason it doesn't have a bullish rating is that it's dropped below its moving average, or it's dropped below this yellow line. I think it's a 200-day moving average. And the rule for the power gauge rating is to turn a rating from bullish to neutral if it's still a positive power gauge rating factors, but it's below this line. So let's look at the power gauge rating. Over here, the far right, and our development team just met with me to show me that they are going to make this more obvious. But until they do, this is probably the most important thing you can look at on this chart, which is a drop down of the power gauge rating. And you can see financial earnings experts are all bullish. The thing that's not bullish is technicals, which is indicative by the price. Chaikin money flow here means money flow in relation to its industry group, whereas this is relative strength. I'm sorry, this is Chaikin money flow based on excuse me, I'm getting the relative strength mixed up, so ignore that. Relative strength versus market this is relative to the industry group right here, the very first factor under technicals, whereas this is the relative strength down here is relative to the SPY. So overall, this is not a bad rating. It's just that the price has dropped below that average. So I think I'm going to sell this and put it into something that has a stronger potential to outperform. Okay, Boeing. I bought Boeing on these pullbacks, these recent pullbacks here, February 6th, or when was February 6th was back here. Yeah, back in here. And then I bought more recently on one of these dips. So you know what? I'm just going to leave this power gauge rating down so you can see the major components, and we can drill down on any of those factors that are within those major components if we want to. So this is up nice today. It was up like, gosh, I think it was 6% yesterday. It was this stock, to me, is solid. Power gauge rating is neutral plus, again, because it's dropped below this orange line, this moving average. But money flow is still strong. Relative strength is still strong. So this one has been in the news a lot, Boeing, because of the impact the trade tariff from potential trade tariff from China could have on Boeing. I think they do 15% of their sales are in China. So if China retaliates with a tariff on our goods coming out of China, that would impact Boeing, and that has thus impacted the price recently, which is why you can see it kind of traveling down. But now that the saber rattling is a little bit quieter, this might have the opportunity to bounce back up. But in any event, that is all news that I tend not to react to. I really go by the indicators and not by what is happening on the news cycle, because that's really more for day traders. I'm more of a swing trader. I'm stay with a trade longer, usually at least a couple of months, sometimes not when I'm doing an earnings play, but typically 2 to 6 months is how long I typically hold a stock. So I'm really looking at the indicators, not at the daily news and all the whipsawing back and forth. Okay, CNC. This is another stock that I bought on these recent pullbacks down in here. Again, around that February 9th period. And it's neutral plus now. You can see power gauge rating is really strong, again, except for that technical component. That's not bad. You know, it's relative strength to the market. That's to the industry group is strong. Money flow, it's saying is strong there, but it's red here, so I don't quite get that. But this is a stock that if money doesn't start turning around, I'm likely to sell this one as well because I don't like a negative money flow. But relative strength is just picking up again on this. I have to say this last month, I guess I should say, has been a really challenging time to make these calls because it's not as clear cut as it's been for the last couple of years where we've kind of been lulled into low volatility. So this is a little bit more of a different focus now that we've had the volatility back in the market. And I'm a little more patient because volatility does bat things around. Okay, FAF. This again is neutral plus. Let's look at expert opinions on this. The things I like to focus on are short interest and insider activity within those expert opinions. One is neutral and one is in the bearish camp. Insiders are not buying this stock right now, but they're not shorting it. So it's kind of 6 one way, half dozen the other. What I'd like to do is take my profit on this because I bought this quite a while ago. I think I bought it back in the fall, somewhere in here, around 54. I'll see what happens in the next cycle. If power gauge turns back to positive, which very likely to do because it's just recently, you can see it just dipped below that long-term moving average a day or two ago. So that's not significant. It'll probably turn back to bullish. And I'll probably just wait for a nice bump like I got here to sell this when it hits the volatility band on the upper side. Get some cash out of the market. JP Morgan, this is a stock I recently bought too. I think I bought it on the 2nd of the W pullback back in here, early March. And this again has a rating that is neutral plus. Let's look at the 4 components of the power gauge rating. The weakness is in a little bit of financials, neutral on cash, neutral to bearish on price to sales. Those are 2 factors that I typically look at. Earnings, if we're going into earnings, which is not till April 13th, we've got, 3+ weeks on this before they report. And this is pretty much neutral to bullish on earnings. So not anything here to give me pause. Insiders are not buying it, but shorts are not shorting it. So again, it's kind of a 50-50 toss up there. So JP Morgan is known as the best managed bank in the country. This I see as more of a longer term hold. So I'm comfortable staying with this. And I'm confident that this price will come back up above that orange line, turn the power gauge rating to green, and get back on course. The other thing I do, if I'm undecided about whether to buy or sell a stock, is I look at the 5-year view. So you might look at this and say, well, gee, should I sell this now because there's a little bit of money coming out? I mean, over 5 years, this stock has consistently gone up. So to me, that gives me the confidence to say, this stock is just being batted around by the typical volatility that's going on in today's market, but it's a solid company, not to worry. Now, this is a stock, Lennar. Neutral power gauge. you can see a dip below that moving average back in late January. Negative relative strength. Money has just recently turned positive. This is probably a stock I'm going to sell. It's just a question of when. Just waiting for the right time to sell it. I will take a loss on this. But I'm not sure that I'm not confident that this is going to turn around and go up with the rest of the market. Okay, C large. This is the Chaikin Index IQ large cap, which was introduced as an ETF, introduced in mid-December. And you can see it's been buffeted around the same W pattern that the market sees. I'm just going to hold this. This is my kind of long-term holding. It's a basket of, I think it's 200 large cap stocks that are in it that one can buy as an ETF. Chaikin small cap is the same Index IQ ETF that was launched. This one happens to have been launched back in May, so it's coming up on what, almost a year. And again, this is something that I look at for holding a longer term. I did recently take some money out of the small cap, put it into the large cap. And let's look at the SPY, as I do hold an S&P 500 index fund with Vanguard as well. And this kind of gives you a perspective on the market. So when you're looking at your individual stocks, this has a very similar pattern, right? With money and relative strength recently dropping. So that's why I'm not like panicking when I see these drops in relative strength and money flow, is because it's happening across the market. It's not just the stocks that I'm in. And that's the way I evaluate my portfolio. So then what I do is I look at my watch list. And I've come up with what I call a short watch list, which is kind of a preferred watch list, if you will. So let's take a look at this. This is what I would do next. Go into this watch list. Let's go back to a blank screen. This is how it would come up. First thing I would do, again, go up here to this little bell, the alerts view, see what's changed. Oh, we got some buy signals on stocks I'm watching. And power gauge turned rating on cores. So let's go into the ones that have the buy signals. HII, that's aerospace, Adobe, and Deckers. Deckers is shoes, I think, clothing and shoes. So let's look at HII. Has a bullish rating, and it's got a relative strength buy. Okay, so I don't own this. Let me see how trustworthy, how dependable the previous relative strength buy and sell signals were on this stock. And then you look at the previous triangles here. Did they give you fair warning, both on the upside and the downside? I would say yes. So this is a candidate for a good buy. The reason I'm not buying it is because I already have Boeing, and I have a pretty big position in Boeing. Sometimes when I'm really confident about a stock like I am with Boeing, I'll buy like 2 positions worth. Typically, I buy the same cash amount and invest the same cash amount into each stock that I buy. So in Boeing's case, I did it twice. So I'm not apt to get into another aerospace stock right now, but I think this is a good stock to put on your watch list. You can see that it didn't have the huge reversals that the market did. Remember, we just looked at the SPY, and that had that very pronounced W bottom. This did not, so that's a really good sign. What I would do if I were more interested in actually buying this, Let's break down the power gauge rating. You know what I like to look at: price to sales and cash flow. Kind of neutral and bearish, not huge. Earnings. What's going to happen? Earnings surprises bullish. That's great. Means coming up on their report May 3rd, they're likely to outperform because they'll beat analyst estimates most likely by that surprise being bullish. Estimate trends. This is great. Very bullish. That means they likely to beat the estimate, and their next report is May 3rd. Shorts, kind of just into the bearish camp, which means the short sellers are shorting this. They are betting on the stock price going down. However, insiders are still buying it in droves by that very bullish insider activity component. So again, not a definite buy. I would like to wait, if I were to buy this, for this money flow rather to get positive. But look, it is oversold right now. It's below that 30 mark. You've got a relative strength buy signal. The previous ones have accurately predicted that both on the upside and the downside, which would give me confidence that this is probably a pretty good stock to buy. So if you all are looking for stock ideas, I would put HII on your watch list. Perhaps wait for that money flow to go positive, or just take a bet on it and go with it right now because everything else is leaning that way. Okay, what were the other ones? Decker's had a buy signal on it. Let's see, what was that one? Oversold, okay. So I'll drop down the oversold, see what the previous oversold buy signals did. How were they? Fair to Midland. This is definitely oversold. You can see by it below this 30 mark on the overbought oversold indicator. Just a teeny little bit of money flow coming out of it. Strong power gauge rating. So, and the industry is strong. So this is still a good candidate, particularly now that it's pulled back to that oversold. But here, look at this. For me, this would be a pause. Shorts and insiders both very bearish. That to me is a stop sign, saying no. I mean, other than the power gauge rating, there are three factors I like to drill down on. Shorts and insiders are two of them. The other one is either price to sales ratio or cash flow. I like one of those to be positive, which it is. We've got a lot of cash. That's good. But this situation here with the expert opinions would give me pause. So this stock I would pass on. I'm not going to buy this stock, even though it's got that oversold buy. So let's see, where's Adobe? Adobe had an oversold buy on it as well. Looking at the previous oversold buys, yeah, 2 out of 3 gave you a good steer. It's pulled back here and pulled back again a little bit today. You can see it's oversold below that 30. There's a little bit of money coming out. But, you know, honestly, a little bit of money is coming out of everything recently with these automated sell orders that keep going in and sell in droves as the price drops. So it's not as I would evaluate it even like in early January. I would look at money flow differently than I look at it now. I'm a little more forgiving, in other words. Let's look at this. Shorts, definitely not. Shorting it, which is a good sign. Insiders, however, are not buying this stock. But boy, everything else is really strong, isn't it? Let's look at financials. Price to sales is poor, and they don't have a lot of cash. I mean, those are two of my other kind of barometers that I like to evaluate and be positive before I jump on a stock and buy it. So I leave these on my watch list. I'm not ready to pull the trigger on any of them, but what I would do is flip through the rest of them, see what's going on. This is a nice setup. Bullish since October. It never went under that long-term trend line. Very strong relative strength, and money's now kicking back into it. And it recently had a looks like an oversold buy signal on the 22nd, which was, what was that, Friday perhaps? So recently. So this is a good one. Very bullish power gauge rating. Let's look at price to sales is bullish. Free cash flow is neutral to bearish. But they've got price to sales positive, so that would kind of satisfy me. Shorts are neutral. Insiders are buying it. So this to me would be a much better candidate than, say, any of those three we looked at with buy signals on them. This to me would be a much better candidate to even buy, today on a pullback. It's kind of pulling back to 72. Heidrick & Struggles. This came up on a screener last week. And look at that money coming into it. I would wait for this to be oversold. Cores. I just sold this yesterday. I felt it was just kind of going sideways, which you can see it is kind of going sideways there. Progressive. This is another stock. I would love to own this stock, just waiting for the right time to get in. Shorts and insiders are still bullish. Financials, cash flow is strong. So this satisfies all of my criteria, and it reports in a couple of months. So this one, I'm definitely interested in looking at this one to buy. So that's my thinking. That's the way I would do this. And it obviously has taken me more than 15 minutes because I've been talking. When I do it, it's just boom, boom, boom. And then I do the same routine at the end of the day. So I see we're a few minutes before 12:30. So if there are any questions, happy to take those questions. And this is being recorded and will be sent to you tomorrow. And by next week, all three of these Inner Circle videos will be up on the subscriber-only section of the Chaikin Analytics website. They're building out a new page for them. So Chris, you want to let me know if there's any questions?
Sure, Sandy. Actually, we do have one from Joe asking if you use trailing stops.
I don't use stops. My stops are really the indicators, the power gauge, relative strength, overbought, oversold, and money flow. When those all line up indicating one way or the other, that's my trailing stop. But I don't put anything automated in. And recently we've had really good proof why you don't want to put that in, because of all these, these big orders that have gone in recently with this tremendous volatility. Remember back February 6th, I think it was, the Dow intraday moved 1,000 points. I mean, that would be triggering your stops, right? And you'd sell, even though 3 minutes later it could be up above that stop order. So that's why you don't want to get trapped in there. You want to be in control of when you sell, not be affected by automated orders that are going in, taking that price down.
And we have one more asking if you can talk about how you would handle an earnings play.
An earnings play. Okay, let's go into... Okay, so we want to know what's going to be reporting earnings, right? Let's go into the screener. That's the best way to find it. For the screener, I always put strongest industries, which would filter, so I only see stocks that are in the top 20% of industry groups. So that already puts the wind at my back. Power gauge rating obviously is bullish. Let's put these into earnings surprise. Okay, earnings surprise, I want to be strong. And then I'll go back to my favorite expert opinions, which are shorts. I don't want the short sellers to be shorting my stock. And I'd love for the insiders to be buying my stock. So I'll put those both in as strong. Let's see, how many do we have so far? We've got 23, okay? Then look at money flow. This is, I want money flow to be strong. This is the classic bull pattern. And I want relative strength to be strong. And somewhere in here is earnings date. There we go, earnings date. Let's say within the next week. We're kind of at the end of earnings season, so this might limit us. Okay, so there's only one there now. But let's look at this. So here's what I went from a universe of over 5,000 stocks down to one. I'm going to save the list. I date it. 3/27, 18, screener, earnings. And I want to view it in a watch list. So I click that, continue, and now it'll pull that stock up. Okay, so here's the stock. They're reporting tomorrow morning. So if you were to buy this, you'd need to buy it now. Earnings component, let's drill down. The surprise is bullish, as we know, because otherwise it wouldn't have passed the filter. Consistency trend, not great. Let's go into the additional expert opinions, which are estimate trend, not great. So this one may not be the most reliable one to put my money on for an earnings trade. But let's look at what they've done in the past. Okay, they beat here because it's green when they reported back in November. They beat here. They beat here, but in 2 out of times when they beat, they spiked up and then pulled way back. So if I were to buy this, anticipating that they were going to do the same thing tomorrow, I would watch it very carefully tomorrow, expecting that spike up of what, about 5–10%, and sell it on the spike, because you can see it pulls way back, which is typical what happens when they beat. Let's look at a 5-year view on this. So it's come back from 2014 kind of down. It's now, as of 17, started going up and now has kind of gone sideways. This to me is not a great stock to buy. It doesn't give me enough confidence that it's going to move forward, but that's the type of thinking and process that I would go through when I'm looking at something. Here's your EPS, and you click that. It drops the actual earnings down. When you hover over it, which you know by green that it did beat, but it gives you a little more detail. And I think you get more, you get more detail here too. But that's how I would evaluate. So for this one, I wouldn't buy it before tomorrow's earnings, but we are coming up into a new earnings season in a few weeks. So that's what I would do. Use your screener and screen for that earnings component, or earnings surprise being strong. Make sense? Okay, are there any other questions? Okay, well, as I say, this is being recorded. It'll be sent to you tomorrow. And our last session of the Inner Circle is next Tuesday at noon, where we're going to talk about how to avoid the pitfalls. So I hope this has been helpful to you, and I look forward to seeing you next week. Chris, thank you so much for setting this up.